The MACD indicator, an absolute staple in the trading world used by millions every single day. But if you've used the MACD before, you'll notice it comes with a slight flaw. You see, the MACD is great when the market is trending. It actually does a pretty good job. But when the market starts consolidating and moving sideways just the slightest bit, well, let's say the MACD performs not so good.
And I've got to say, in all honesty, it's the biggest piece of dog shit.
But what if I told you I found a brand new indicator that is basically the super ultra mega upgraded version of the MACD, and it performs way better. I actually tested this indicator and it performed 3 times as good as the normal MACD, which if you can do the math, that means more profit, which we all like. I'm gonna show you what this indicator is, the best settings for it, and at the end of the video, I'll give you a secret strategy you can use right now in order to use this thing to the best of its capabilities. Let's not waste any time, let's get straight into it. So, to understand this absolute overpowered indicator, we first have to understand the normal MACD. With the normal MACD, when this blue line crosses above the orange line, or when the histogram turns green, that means the market is bullish and uptrending. This is where you would normally buy. When the blue line crosses below the orange line and the histogram is red, that means the market is bearish and is downtrending. This is where you would normally sell. Now, any monkey with a computer could do this strategy, but the major downside of this specific strategy is that it does not work well in consolidating markets. For example, here, the blue line crossed above the orange line, giving us a buy signal. But if we look above, the market is consolidating at this time, so the indicator wasn't so accurate. Which, if we actually entered this trade, it would have been a bad signal and we would have lost money.
Whoa, 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 hey.
Now, what if I told you that this new and upgraded version of the MACD indicator will eliminate these false signals so we only get entry signals when the market is trending? That would be pretty cool, right? Well, I'm about to blow your mind. First, go to TradingView. I'll leave a link in the description. Once you're on the chart, go to the Indicators tab. Type in Impulse MACD and click this one by Lazy Bear. You will then have the indicator added to your chart.
Oh, that's hot. That's hot.
As you can see, it looks super advanced and just a tad bit complicated with all these different colors. Let me show you the settings I personally use so it's just a tad bit easier to read. Go to the settings of the indicator, make sure you're on the Style tab. First, change all these colors to blue, then make sure to change the formatting to align. Next, change this Impulse Histo setting to red and make sure the formatting is set to columns. Then finally, we are going to change the color of the Impulse MACD signal to orange. This will make the indicator look just like the original MACD indicator and make it a lot easier to read the signals. So let's move on how to read this indicator, and then after that I'll go over an actual strategy you can implement and use right now. Okay, so where do we start? Wait a minute, do you guys see that? My chart, it looks a little weird. You guys really don't see that? Here, let me zoom in. It's still kind of small. Let's zoom in just a little bit more. Wait a minute, is that Joe Biden?
Yes, TradingLab, it is me, the flamingo version of Joe Biden.
What? Why are you you know what? Never mind. What are you doing on my chart?
I want to tell you about my broker that has only 4% commissions. They are pretty dandy.
Joe, you're an idiot. Your commissions are huge. My broker's commissions are only 2%.
Donald, get out of the video. This is my time to shine.
Joe, you're old. You don't know how to trade Forex.
Guys, I'm sorry to tell you, but both of your brokers don't sound that good. Rather than having 4% commissions or 2% commissions, on Hanker Trade, you can get 0% commissions. Yes, you heard me correct, 0% commissions for STP accounts, beating almost every Forex broker out of the water. If you need a new Forex broker and want good commission rates, I would 100% recommend checking them out. You get a deposit bonus if you use the link in my description. Okay, enough with the sponsorship, let's get back to the strategy. Now, what makes this indicator so superior to the original MACD strategy is this. Instead of like the original MACD, where it gives you false signals when the market is consolidating, with this upgraded version, it won't give you signals at all when the market is consolidating. It will only give you signals when the market is trending, making it perform way better than the original MACD indicator.
Nice.
So, the strategy is simple. It's kind of like the old MACD. When the blue line crosses above the orange line, that is signaling there's bullish momentum and you should buy. When the blue line crosses below the orange line, this is signaling there's bearish momentum and you should sell. When the lines are moving sideways like this, that indicates the market is consolidating and you should not be taking any trades. Now, using these signals works pretty well, but there are some little tweaks we can make to make it perform so much better. Let's get into some actual strategies we can use around it. First thing, we want to add overbought or oversold zones to our indicator. You can do this by simply clicking this line tool on the left and clicking anywhere on the new MACD indicator. We are going to add two lines, an oversold line and an overbought line. We'll make the oversold line green and make the overbought line red. Now, you may be asking,
how the hell do I know what level to put these lines?
good question. If we take a look at the indicator closely, there's going to be some minor crossovers that don't go far from the zero line, and we're also going to have some major crossovers that happen far away from the zero line. Essentially, the smaller this crossover is, the weaker it is. So if we want to only enter strong signals, we need a way to separate the minor and major crossovers. To do this, just zoom out on your chart, and then you're going to see some minor crossovers and some major crossovers. Draw a horizontal line separating them. For this specific example, my line is at the -8.24 level. So that's the oversold line. For the overbought line, you're going to use the exact same number, just make it the positive version of the first number. So the strategy is simple. We only want to enter trades once the indicator gives us a buy or sell signal that is outside our overbought and oversold zones. Here's an example. Here, the blue line crossed above the orange line, but if we take a closer look, it happened between the zones, meaning it's a weak signal. So we don't enter this long trade. Good thing we didn't, because it would have been a losing trade and we would have lost money. Here's another example. The blue line once again crossed above the orange line, but this time it did it below our oversold zone. So we can now consider this a strong buy signal. We enter here, set your stop loss right below the recent swing low, and you're gonna set your take profit ratio 1.5 times larger than your stop loss. And as you can see, it was a beautiful winning trade. Let's do one more example, then I'll show you how we can improve this even more. Here, the blue line crosses below the orange line. It also did this above our overbought zone, so this means we can now enter a short trade. Enter here, set your stop loss above the recent swing high, set your take profit 1.5 times larger than your stop loss, and just like that, we have another winning trade. A quick tip about this specific strategy, instead of using a set 1.5 risk to reward ratio, you can have a dynamic take profit. What I mean by this is this. All the rules are the same. So if the blue line crosses above the orange line in the oversold zone, you enter. But instead of setting a set take profit, you would only sell once the blue line crosses below the orange line, giving you a sell signal. This will allow bigger winners and allow the indicator to ride the momentum more. Feel free to do your take profit strategy either way, just thought I'd share that as well. The final strategy I like using with this indicator is how I personally use it on a day-to-day basis. I like to use this indicator for finding breakouts. This is how I do it. First, you want to look for a strong market consolidation. You can do that by simply looking at the new MACD indicator and looking for the blue and orange line to be moving sideways for a long period of time, like this. It is very important that it's been doing this for a while because we want a strong consolidation. We don't want the indicator to just be moving sideways for a little bit like this, because this can provide a false signal. So look for the indicator to give a sideways line for a good period of time like this. The reason why we are looking for a consolidation period is because whenever price breaks consolidating zones, it usually jumps up or down a huge amount, which we can then try to catch that wave and ride that momentum for some huge profit.
Dude, you get the best barrels ever, dude. Just like you pull in and you just get spit right out of them, and you just drop in and just smack the lip
The cool thing about this breakout strategy is whenever the price does break out, it really breaks out, resulting in some really crazy gains. So this is how you do it. You wait for the market to be consolidating by checking the MACD indicator and make sure the lines are moving sideways for a good amount of time. Now, there are some ways you can significantly increase the chance of catching a breakout. What I like to do is pair this new MACD with my private indicator from TradingLab.ai. There's a trend table on my indicator that we can use to our advantage beautifully. What I do is I'll check the consolidation metric on the table on my private indicator just to make sure the market is indeed consolidating. If both the lines are sideways for a good amount of time and the trend table from the private indicator confirms the market is in consolidation, I only then start to look for a breakout trade. You do this by waiting for the lines to cross in either direction. They can either cross upwards or downwards. In this example, the lines start to cross upwards. This is giving us a buy signal telling us the market wants to start doing a bullish breakout out of the consolidation. Right when this indicator deviates from moving sideways to upwards, we can start to look for a long entry here. Now, what I like to do is again use my private indicator for some extra confirmation to really confirm this breakout trade. There's a tool on my indicator called the breakout probability tool. What it does is look at all the past candles from the previous chart history and their positioning and gives you the exact probability of which direction the very next candle will likely go. So since we got a buy signal from the new MACD indicator, we want to make sure the next candle has a higher probability of going up compared to down, which if we open the probability indicator, it's signaling the very next candle has a higher probability of going up than down. So that gives us the confirmation that this is a good buy signal and an upwards breakout will likely happen. Once we get both confirmations, we enter a long trade. Set your stop loss at the previous low. Then since breakouts tend to usually have bigger moves, we can actually set our take profit 3 times bigger than our stop loss. Or again, we can use the dynamic strategy of only exiting once the blue line crosses beneath the orange line to give us some bigger room for profit. It's really up to you. But as you can see, we caught this upwards breakout perfectly right before it even happened. And by doing so, we made some absolutely crazy gains. If you'd like to add my private indicator to this strategy for some extra confirmation, I'll leave a link to it in the description. Have you ever wondered what would happen if you gave a robot $30,000 to trade for you? No? Just me? Well, that's exactly what I did. I gave a robot $30K to trade for me and didn't touch it for a whole month. Yeah, I know. I'm a whack job. Anyways, the results, they were pretty interesting to say the least. Go check that video out. It's pretty mind-blowing. Thanks for watching, and I'll see you guys next time.